What if payday lending, often criticized as predatory, might actually play a vital role in the economy? Before dismissing it, let's explore the reasoning behind this claim through the lens of economist Thomas Sowell. In the book Basic Economics, Thomas Sowell reminds us that economics is fundamentally about trade-offs. Every policy, every service involves balancing benefits and costs. And payday lending is no different. Critics often focus on the high interest rates these loans carry, but it's equally critical to examine why these rates exist and what alternatives borrowers might face without this service. Payday lenders provide small, short-term loans to people who often have few other options. Banks typically won't extend credit to individuals with low income or poor credit histories because the cost of servicing these loans outweighs the returns. Payday lenders fill this gap, taking on the high level of risk to meet a desperate demand. Removing these lenders doesn't remove the need for emergency funds. It simply drives people towards worse options, like unregulated loans or unpaid bills that incur late fees and utility shutoffs. Price ceilings, like caps on interest rates, often harm the very people they're designed to help. If regulators force payday lenders to lower their rates, many may shut down because the lower rates don't cover their operating costs. The result? People in financial crisis have even fewer places to turn. Payday lending isn't coercion. Borrowers weigh their options and decide that the loan with its high fees is still preferable to the alternatives. Critics argue that borrowers are being exploited. But does limiting their options truly help them? If a service exists and people choose it, it's usually because it addresses a real need. Payday loans may also prevent cascading financial problems. Borrowing $300 to avoid eviction or car repossession could save someone from spiraling into homelessness or unemployment. The value of maintaining stability often outweighs the immediate cost of the loan. The debate around payday lending is complex. Sowell's insights remind us to look beyond the surface-level criticisms. Instead of calling for blanket bans, we should focus on solutions that maintain access to emergency credit while minimizing abuse. Fostering economic stability means understanding the trade-offs involved and ensuring that people have choices, even in tough times.